Guys, how you doing this morning? Hope you're having a nice morning. I'm really glad to have you here. Welcome to the show. Today is Tuesday, November 20th, 2018. And I'm going to tell you, I quite a while back, I didn't think we would get past the end of this year before the crash really gets underway. And it looks like it's starting to get underway. But, I mean, what can you do? There's a couple little things, One of the things is that I didn't really expect cryptocurrency. I figured and I forecast it was going to have this drop in price. But I didn't figure it would get started, the drop in cryptocurrency, until the market dropped to a certain level below like 20,000, And the market hasn't dropped below 20,000, obviously, yet. It's still up around 24,000, whatever. And cryptocurrency is dropped. The drop I was expecting to come. But I also told you guys, when this drop comes, it's going to create the buying opportunity of a lifetime. Well, we're in it. Here you go. But it might drop further. It could drop further, but there's something that I like to call cost averaging, and it's what I like to do. And what you do is when a commodity price is falling, you just basically buy in all the way down to the bottom, and you cost average. You don't spend all your money in one lump and buy it all at a certain level. You just keep buying it all the way down to the bottom, like you keep some of your money in reserve. And that's what I call cost averaging. I think that's what everybody calls cost averaging. Anyway, that's what I'm doing, and I'm going to be going in today and getting myself a little bit of cryptocurrency, and maybe a little bit of silver if I'm lucky. I don't know. We'll have to wait and see. Anyway, let's get right in there and open up the charts, take a look and see what's going on. Silver, it's been moving down this morning in price. Right now it's down 5 cents. Can you believe that? How stupid people. Okay, I mean, just in my mind, silver's a no-brainer in this situation. But right now, what are they doing? They're buying treasuries. Okay, so anyway, here's cryptocurrency right here, and what we've seen the bottom drop out of it. It's tried to come back just a little bit in the last hour or two, but it's still only $4,611. I'm gonna get myself in there and get a little bit of this stuff, because it's really down. Take a look at cryptocurrency market capitalizations. $150 billion. Bitcoin dominance 53.2%. And what I want you guys to see is look at the price of Litecoin. $34. Boy, for a whole Litecoin, for a whole one. Not for piece, for a whole blinking Litecoin. $34 right now. I want you to remember that price. In the future, when we get like 5 years from now, I want you to remember that you could actually quite literally buy a whole Litecoin for $34. I'm going to tell you, when you see what a Litecoin can buy at some point in the future, like 5 years from now, what you can buy with one Litecoin, and right now you can buy them for $34, the price practically of a meal for a whole one, you're going to be amazed, because that's what's coming. That's what's coming, honestly. And the same thing with silver. Honestly, if we go back to silver, you can get a whole ounce of silver for $14.35. When you look back at that in the future, at the buying power of silver, and I mean, this is what's coming. So, okay, so these guys, let's switch over. Let's take a look at the Dow real quick here. The Dow may drop another 2,000 points before the stock market selling is done. This is CNBC. Well, they didn't know that the Dow was going to drop any. These guys are all thinking that the Dow's going to go to the heavens forever, and we're in a new paradigm and all this kind of stuff, right? Now they say, oh, well, maybe it's going to drop 2,000 points before the stock market selling is done. Well, nope, guys. And they say, well, the Dow will drop to 23,000 before it's going to stop, before this is going to stop, this madness. Ooh, we're scared. Well, I got news for you guys. I'm sorry to tell you this. Really sorry to tell you this, but I predict the Dow is going to drop to 14,000 before all this stops. And I predict that it's the central banks that are going to have to stop this bleeding that's going to happen. And that's because the system is so over leveraged. There is so much debt creation that debt is counted as credit, and the system is so over leveraged that we're in for a stock market crash that if the central banks did not correct it, okay, get this, if the central banks do not step in to stop this, if they let this continue and just let all of the blood drain out of it, this stock market would go down to around 3,000. That's what would happen. But they're going to step in when it gets probably around 14,000. It might. I'll tell you what. I mean, know when the Fed steps in, I could be a little bit wrong. The Fed might step in sooner. There is that possibility. So I shouldn't be so cocksure about 14,000. But I tend to think that they won't step in until around 14,000. But they could step in early. They could step in early. They could, and if they do step in early, then what's going to happen is the same thing's going to happen if they step in later, if they step in early, but the crisis will not proceed to such a severe level. You know, that's what'll happen. Anyway, let's get right into this. Let's take a look at the Dow Jones right now, and we're down 485 points on the day. So far, and it's down 1.94% on the day. It's 24,531. Here's the thing. I had to put on a little bit different chart today. Some reason I couldn't pull up Yahoo. I don't know what's going on there. I usually use the Yahoo chart. I couldn't pull it up, so I'm having to pull up this chart right here. It's similar. And the Dow's down 485 points on the day so far. So it's a big day down. 24,531. But I mean, we still got lots of headroom. We got over 20,000. We got 4,531. Over 20,000. And I believe it's going to drop down under 20,000. So we could wipe out over 4,000 points in the stock market before the real panic's even going to hit. Before it really gets into their head that, hey, we're in a crisis, I think we're going to knock off about 4,000 points off the stock market. And so that's when I was expecting Bitcoin to really fall, was after those points are wiped out. But Bitcoin's fallen a little bit prematurely. It might fall again when those points get knocked out that I'm talking about. So that's why I'm talking about cost averaging, because if it's already fell down to, say, $4,500 Bitcoin, when we get this next fall in the stock market that takes it down to 20,000, we might get another fall in Bitcoin that might take it down another 1,000 or something lower. So if you pay all your money right now and buy into the cryptocurrencies, then later the price might drop off $1,000 more, and you're like upset. Well, cost average, do what I'm going to do. I'm going to go in there and nip myself off a little bit, but I ain't going to spend everything I got on the stuff. I'm just going to buy a little bit, a little dib-dab, just a little dab of it, you know. Anyway, let's let's go on to take a look at current oil prices. I couldn't get the oil chart either, but oil's fallen off a cliff this morning. Brent light crude, West Texas light, intermediate crude, sweet crude. Look at the price this morning. It's down considerable. What does it say here? They don't give you the price. I don't like this other chart. You know, I'd like to have my good Yahoo chart I use, but can't get it today. I don't know why. It just won't. The page won't come up. But anyway, we're down to $54.36, and obviously a substantial drop in price in this stuff, considering we were up near $70 not long ago. I'm going to tell you, It's very deflationary having the oil price fall. It's going to affect the dollar. Here's the dollar today, 96.53, and what we're seeing is the dollar trending upwards. And this is exactly the way the market should work. If we see the price of oil falling, we should see the dollar trending upwards. Of course, it is below 97, and we did crest above 97 there a week or two ago. But anyway, we're going to see strength in the dollar. As long as we're seeing these downward moves in the stock market, as long as we're seeing the downward pressure, we're going to see strength in the dollar. When the Fed comes in to rescue this, at what point, I'm not exactly sure. I'm not going to be so cocksure to say it'll be 14,000. It could be higher. It might be, they might come in to rescue it when it only goes down to 22,000 or 20,000. They might all of a sudden, hey, change their policies. As soon as they change their policies, we're going to see a reversal in all of this. Complete and utter reversal. As soon as the Fed relents on their quantitative tightening policy and they go back to a accommodative monetary policy, we're going to see reversals on everything. 180 degrees. A complete U-turn on everything. And we're going to see that everything that's been going up, like the dollar index has been going up, we'll see the dollar index turn and go down. We've been seeing the oil price fall. Everything will turn. If the stock market has been falling, the stock market will turn around and go back up again. The silver price is going to shoot to the moon, and the gold and silver price is going to shoot to the moon, and also cryptocurrencies when they make this reversal. This is really the big one that I'm waiting for, is when the Fed has to reverse and change monetary policy, because it's going to have a complete and utter total wow effect to the markets, especially to the recipients of this, which is going to be gold, silver, and cryptocurrencies. The dollar then at that point is going to start its process of finally dying. When they do that, they know this. This is why they're sticking to their guns, even against all odds, and they're still withdrawing $50 billion of liquidity every month from the system. They know this. They know the dollar's going to die once they change reverse monetary policy. At this point, they can't do it, but they're going to have to. That's the whole game we're playing here at this point. What didn't I take a look at price-wise this morning? I think I've covered just about everything. I think I've covered all. Let's take one further look at the Dow here real quick and see before we end this. 530 points down now. It was 485 when I checked it a minute ago, and now 2 minutes later it's down 530. You haven't seen fear yet. These guys that never saw this coming, just remember on this channel I saw this coming, and I give you most all the details about it. I mean, okay, maybe not quite perfect details, like when it comes to when the Bitcoin price was going to fall. I got that off just a little bit, but it's fell. I mean, the price of Bitcoins fell exactly like I figured it was going to, and more or less, this is the beginning of the trouble of what we're going to see coming, and it's not going to be a little tiny correction or anything. When this really gets underway, and it's not really, I don't really consider it underway yet, even though I'm looking at 530 points down on the Dow today. I'm seeing this is just the tremors of the beginnings of this. This is so big. This is so big, you know. And I mean, we could get a bit of a bounce back effect sort of a thing, and everybody goes back to feel normal again, you know. But really, this is the beginnings. It's starting to get, we're heading, I'll tell you what it's like. It's like we're on a river going down the rafts, you know. And you can hear the rapids up ahead. We're not quite there yet. We got to go around the bend of the river, and then we're going to hit the rapids. And I'm going to tell you, it's going to be the roughest ride you've ever been in for in your life. But you can make the most money the quickest if you know what you're doing. You got to realize that all the value of everything in the world is going to transfer during this crisis. Because this is not your 2008 crisis. This is a new crisis. This crisis is going to be worse than 2008. And they almost made a hyperinflation back in 2008 when they cured the 2008 crisis with monetary stimulus. They just about pushed us into a hyperinflation. In fact, everybody out there thought it was going to be a hyperinflation. Oh, everybody was but it never happened. It never materialized because they didn't quite push far enough. It was like pushing a lever, okay, like pulling a trigger on a gun. They didn't quite pull far enough to, right? They didn't quite do it. They didn't quite get that trigger back far enough. This time they're going to have to. This time they're going to have to go 10 times or 5 to 10 times more stimulus. This time they're going to trigger the hyperinflation, quite definitely. So this time we're in for it, and we're going to experience what everybody was thinking was coming back then, back through those years, 2012, 2013 stuff. What we thought was coming then is really going to come this time. There's no way around it. So listen, thank you guys for listening to this market report, and we'll catch you again, and keep your eye on those markets. Bye-bye, guys.